Welcome back to this channel, guys. Takwa FX here. So throughout this week, I've been having a busy day, been having a busy week throughout this week. So we'll be talking about how you can identify the right structure for you to trade with, the right zone, the right OB. It's not all OB that you will trade from. The right OB for you to trade from is what we are going to talk about today. And the entry criteria you are to meet before you take this trade. This can be around 3 minutes or 5 minutes chart for your entry. But we have to frame our trading from the H4 down to the smaller time frame for a bigger risk to reward. We don't trade 1:1, we don't trade 1:2, we don't trade 1:3 here. We take a trade that if it is only one trade that we are able to catch in a week, we should be able to give ourselves profit, even if we have to encounter losses before we had that win. We have to make sure that at the end of the day we are able to keep profit for ourselves. So follow me as I'm going to the chart to show you how we can do this step by step from H4 to a smaller time frame like 3 minutes. But do not forget to subscribe to this channel, turn on notification bell for more tutorial videos to come. Let's get there. So for us to trade this strategy, we need few things. We need an indicator, we need section breaks, we need our structure. So first we have to start with H4, that is the bigger time frame. And I'm using USD JPY on this pair. You can use any pair of your choice. So for the sake of new subscribers, let me show you how you can add this indicator up. So you go to your indicator, you type EMA. Once you type in EMA, this EMA 20/50/100/200 by DS Swift will appear. You click on it. Once you click on it, this indicator will appear on your chart. Once this indicator appear on your chart, there is something you are going to do. You are going to the setting. Once it appear on your chart, you go to the setting, because this is how this indicator will appear on your chart. This is how it's going to be. It's going to be messy. So another thing is for you to go on the setting. You click on the setting on the indicator. You disable most of the plot, which I disable number 1, disable number 3, and I disable number 4. So I have to allow only number 2. Then I'll click OK. If you want your line of the indicator to be bigger, you can select this, but I'll leave it at the number 2. Then you click OK. Once you've done that, this indicator will be on your chart and it will be only one line. So the purpose of us using this indicator is addition for our trend confirmation, for us to know that our trend is really bullish or it's really bearish. And another thing we are going to be making use of is our section breaks. How do we get our section breaks? Click on your chart, your candles twice. Click on it twice. Once you click on it twice, this interface will open. Then you click on this one that seems like box. Once you click on it, this interface will open. Then you click on section breaks. Once you click on section breaks, it's been enabled. Then you click OK. So this is how it's going to be on your chart. So each of this line is telling you the day. This was yesterday and this is today. So this line represents one day. And the only thing you are going to be looking at is the highs and the lows of that very day. It depends on the trend of the market you are expecting. So let us go to our chart now and mark the structure and the right zone for us to take trade from. So now that you know all these things, let us go on our chart. On our chart, before we start, we need something like this. Okay, we need something like this for a bear scenario, and we have to try our best to make sure that any zone we are taking, because these zones we don't need liquidity. We make sure that most of these zones carries imbalance, and secondly, the wicks of the candle below this zone that breaks structure to the upside, the wicks is what we are going to mark. Then once we mark the wick of the zone, we are expecting the market to come inside that wick. The market has to close inside the wick. The market has to come inside and close inside this wick. Once it closes, it has to give us an opposite candle for us to take our trade to the direction, or it has to give us a doji candle, which is indecision. After the indecision, the market has to tell us the next step to take before we take our trade. That means the indecision and the other candle that follows this have to confirm the trend of the market. Another thing we are going to be looking at is, if this market come into this zone, we should look for a shift in market structure for us to take our trade to the upside. And a shift in market structure has to be something like this. This has to happen on our 5 minute. This is to say the market is breaking structure to the upside. Upon coming to this zone, coming back to retest the zone that broke structure, this will be our entry to the upside, and this has to happen on our 5 minutes. So let us go to the chart. Let me show you how you can really implement this step by step. You see this, but for a sell scenario, it's also the same thing. Meaning, in a sell trade, you want the market to keep coming down. The market is coming down. This market is coming down, and this is the zone, and inside this zone there are candles here, and this candle will close and left a wick. So you mark out the wick. Once you mark out the wick, you go and wait for the market to come inside this wick on your 5 minutes or M15 and give you opposite candle. Once that happen, you take your trade to the downside, or you expect the market to come inside this week. It has to close inside the week, then give you a change in market direction, something like this, but the bear scenario. Then you take your trade to the upside. All these things that I'm showing, most people don't even show you how the entry. Most of the times they don't show you this. Then you take your trade to the downside. So this is what we are going to be looking at on the chart. So if you want to learn the way I trade personally, you can contact me through my Telegram channel, which the link will be on the description below. And if you want to join my VIP group, which is my signal group, you can as well contact me. So therefore, let us go to the chart. Let me show you how you can implement all these things step by step. So another thing is the way we trade here. We are trying our best to make sure that whenever we take a trade, that trade can serve us for the week or the upper week. Instead of us going to the market, we take like 5 losses and we come back the other day. The only wins that we are able to have is the one that will give us 1:2 RR, which cannot even cover up our past week's losses. So that is what we are running from. So stick to the bigger time frame and then do the right thing at the smaller time frame. So let us go to our chart. So this is my USD JPY H4. Like I said, we can see that this market was trending down. It's bearish to the downside. The market is, we can see that this market is trending down, and it is also below this 50 EMA. It's also below this EMA and is trending down. This is to show you that this market is bearish. As you can see, this day open at this range. It pulls back down. You can see here is the low now, and this other day open, this line which I said is daily, this line indicates a day. So this day open from here, it comes back down and it closes below this very zone, this very day now, which open around here. This is to show you that this market is really bearish, because all the things are aligned together. The market now, it's below the 50 EMA and it closes below the previous day low. So the market is bearish. The only thing we are to do is to take a bearish trade. So therefore, we can see at this moment that this market was trending up, and this very candle here, this very line represents a day. This line represents a day, and this very one here represents another day. And here was the open of that day candle. Here was the open of that day candle, as you can see right there. And what happened? Here was the open of that day candle, and what happened? This candle trying to go back up, it pulls back down again and give us another low right here. So after this day open, it closes below this 50 EMA. This day open, it closes below this 50 EMA. This was the week of that very day. This is the low. Another day open, which is this very line here, it comes back and close below this very low again, and also close above the previous day low that opens around here. You get? So this shows you that this market is really bearish, because it closes below the EMA and closes below the previous day low. So all this thing goes together. The market is truly bearish. Then we have to look for a sell scenario. So we look for the candle, the zones that lead to break of structure of this low, then which happens to be this very one right here. It happens to be this very one right here. So we have to mark the wick of this candle. The wick is what we are going to mark, and we expect the market to come inside that wick. And then once the market come inside the wick, which is this one, we mark the wick, we extend it. Now we go to our 5 minutes or M15 and wait the market to come inside this wick. Once the market come inside this wick, then we look for our entry criteria, which have been telling you guys about. So let's go to our M15 or 5 minutes. I will have said 5 minutes. Let me say this day. Okay, it's still very far. I may not really have all the data to enter this trade on my 5 minutes. So let us check M15. Here is the zone. So let's check M15. Okay, so here is our M15, and here is the zone we mark, and here is the line that we mark, and we expect the market to come inside that line, not just coming inside the line. It has to close inside that line and then give us opposite candle, or close inside the line and give us engulfing pattern or a doji with a confirmation, or close inside the line and give us a shift in market direction for us to take a trade. So what happened is that the market came inside this line right here. You get? The market came inside this line and give us a doji right here. There was a doji right here. After the market closed so bullish, it closes so bullish inside this line, and then it gives us indecision, which tells you that this market doesn't even know where it wants to go by this time. But the confirmation comes with this engulfing, this bearish candle right here that closes below this one. So upon this market giving us this bearish engulfing candle, this shows that this market is ready to go down. Then once that happens, we will look and place our trade at this close of this engulfing of that indecision candle, that doji. That is where we will place our trade. But if you are to take this trade on your 5 minutes, you will look for something like this. You will wait for the market to come inside this zone. Once this market come inside this zone, like I said, the market has to close above the line we mark. So once the market comes and close above that line, you are going to look for something like this. This is to say this market breaks structure. It comes and tells you that this market, we don't think we are going up again. It breaks structure to the downside. Then upon this market retesting this zone, because you look for you will look for the last bullish candle that lead to a break of structure from this zone, and you place your trade. So upon this market retesting that last bullish candle, you take the trade to the downside. And this kind of trade, for you to scale down to M5, is going to give you a bigger RR. This is going to give you a bigger RR from this market. So that is why it's advisable for you to go through all the time frames, which I will do a top-down analysis from daily to 5 minutes. So you see that it's possible that only one trade can pay you off. So that is it. But for us to take this trade on our M15, you just place your trade this way. You place your trade this way. Your stop loss will come above that candle. Then you go for your 1 to 15 or 1 to 20. You target this first low first. This first low is what you will target first before you can target more. This first low first. Once you target this first low, you can then move your stop loss to break even, and you target your 1 to 15 or 1 to 20, depends on you. So your 1 to 20 was at this point. That is when you have already locked in your stop loss and you target your 1 to 20, and you will be able to cut your 1:20 at this point. So let us go back again to our 4-hour chart and check if we can see another entry still using the same scenario. So this is another. We are still on our H4. We've seen that this market open this day. It opened to the upside. This day it opened and ranged to the upside. So another day, this market opened at this point. So this day opened at this point. It was ranging throughout this day, and here was the last low this market gave us this low right here. As you can see, the market is still bearish, so it give us this low this day. As this market open again at this point here, it opens again with this candle and it breaks this low, it breaks this structure to the downside. So this is to say this zone right here becomes our point of interest. This very one right here becomes what you are looking for. So you mark the wick. Once you mark the wick, you are expecting the market to come inside and give you what you want to take trade with. So you mark the wick. Upon you marking this wick, you move down to your M15. You move down to M15 for you to check if you see an entry in this market. Let's go together. Do not forget to subscribe. The only thing is, for you to stick to one thing becomes a problem. But what if you look for someone who have already, quite all right, this person is doing this thing, and you pay them for them to teach you the psychology behind it, on how you can stay consistent and stick to the rule of your strategy. Like I've have many strategies on this channel which you can stick to one, or if you can't, it's not all the strategy that I teach on this channel that I use. I stick to only one, which I make it my own. So if you want to trade the way I do, you can contact me. If you want to join my VIP or my signal group, you can as well check the link on this description below. You can reach me through that link. You can also join my VIP group. So that is it. So on our M15, all right, here is my M15. Here is the M15. Like I said, you should allow a candle to close inside. You can see this candle close inside this. It closes inside and it gives us an indecision candle. It closes inside and gives us indecision candle right here. But this candle here, it was not an engulfing candle to confirm if the market is going bearish. So again, it pushed back up again and then give us engulfing candle. after this indecision right here, it gives us engulfing candle, which shows that this market is ready to go down. So if you were to trade on your 5 minutes, you will just take your trade at this anyhow. You must see a candle confirmation around this range for you to take a trade, and this will give you a bigger like 1:30 from this trade, or 1:35. You get? So but for the sake of this very one, I'm going to place my trade right here. I'm going to short right here. For the sake of M15, I will short right here. But if you go to your 5 minutes chart, this one trade alone will give you 1:30 RR or more. So I will short it right there, and you see your first TP has to be this low right here. This low has to be your first TP, which is 1:17. That is 1:17. Your first TP is this low right here, 1:17. And you are using your M15 to do this, not even your 5 minutes. That is 1:17, and you can go further for 1:20, after which you move your stop loss to break even. This is 1:35. Your 1:20, it's right there, and you've gotten it right. So this is it. So I think we have to stop at this point. We have to stop this at this point. I've been trying to do this before, but my mic was switched off. Just to show it to you guys that it's possible, my mic was switched off, so I have to start recording again without mic. So if you want to trade the way I do personally, feel free to contact me through my Telegram link on the description. So this is Aqua FX as I sign up. Or if you want to support my work, why? You can do that. So I remain Aqua FX as I sign out. But if you have any comments, you have questions or anything, you can ask. There is no problem. Peace.